When you issue that credit, you create leverage on the capital. And when you create leverage on the capital, the equity of the company issuing the credit becomes digital equity, and that equity can outperform the Bitcoin. So if I want to create a company that's going to perform 2x Bitcoin, I take the Bitcoin, I issue Bitcoin back credit against the Bitcoin. I issue digital credit backed by digital capital. I create digital equity, and the digital equity outperforms the underlying capital asset. Now, that's a profound idea. Who are those companies competing against?
Hey guys, welcome to Everyday Finance. Bitcoin is framed as the next evolutionary step in the history of money, according to Saylor, who explains why Bitcoin's long-term trajectory remains unstoppable. Bitcoin, he contends, is a superior store of wealth in an era that is characterized by inflation and monetary expansion. This is because digital scarcity is becoming the foundation of modern value. The foundation of Saylor's argument is a straightforward concept, just as gold previously revolutionized the concept of banking by virtue of its physical scarcity. Bitcoin is currently doing the same thing in the digital era by being decentralized, verifiable, and immune to the control of the government.
For every company in the world, in any capital market, they're always better off to buy Bitcoin as their capital asset. If you're in Cuba, but it might be illegal in Cuba, but you're still better off as a Cuban company to capitalize on Bitcoin, right? North Korea might be illegal, but you're still better off, right? So barring the legality of whether you can do it, you're better off in Venezuela and Nigeria, every country in Africa, you're better off to hold the Bitcoin for the obvious reason that it's going up 55% a year, and it's going to go up nearly 30% a year in dollars. And most other capital assets are either collapsing against the dollar. Local credit, local currency is collapsing against the dollar in Africa, right? Or it's pegged to the dollar, right? And so every company should capitalize on Bitcoin. Now, the next question is, if you're a public company investor, where can you create the screaming metaplanet or strategy return? How do you get a 10x or 100x return on your equity? The most compelling opportunities there are mature, large capital markets suffering from financial repression. So what you'd like to find is a capital market like the Swiss or the Japanese. It's big. There's $1 trillion in it, but the risk-free rate look at the 1-month government T-bill rate, and when it's zero, or when it's 50 basis points, Bitcoin's giving you 55%. Mm-hmm. You can borrow money at 5%. If you offer 500 basis points more than zero, you borrow 5%, 5.5%, then you've got massive leverage. You're investing at something like 30% over the next 20 years, and you're borrowing at 5%. That means you're capturing 100% of the spread up front, and you're capturing, initially, 80, 85%, and it's compounding to 95% over the decade. So you're capturing 100% on the front end and 90% plus on the back end, and you can generate, 4 or 5x leverage, or 50% leverage, or 60 or 70% leverage on your balance sheet. You could do 4x the Bitcoin return, 5, 6, 7x the Bitcoin return. So in theory, a pure play company in one of those markets, in any European Euro market where the risk-free rate's 200 basis points, Switzerland, Japan, those are all great. If the US SOFR rate comes into 200 basis points, that's very bullish for every single US Bitcoin Treasury company, right? Because now you can offer 7% dividend yield, invest in Bitcoin. You'll capture 90% of the back end, 100% of the front end. It's a screaming profitable business for you. Well, the idea is you'd like to move everything at the speed of light. And so why not tokenize dollars? Why not, even Bitcoin tokenized on the Lightning Network, right? Or tokenized somehow. Everybody wants to move to Bitcoin in a second, then they want to move it in a millisecond, right? So tokenize Bitcoin on a layer of 3 would actually have use, right? You can tokenize every stock, every bond, right? BlackRock has tokenized U.S. Treasuries in one of their instruments. And if you tokenized Apple stock or Microsoft stock, then people could take custody of Apple stock in India on Saturday afternoon. Yeah. Okay, so tokenization makes the entire capital markets work more efficiently, more egalitarian, faster, smarter, stronger. And it also provides the power of self-custody or quasi-self-custody, right? It takes you to a point where if you tokenize on a decentralized network, then equities and securities could look more like bearer instruments, right? When you're holding the security at a regulated custodian in New York City and, you're on the sanction list, you lose custody of that, right? So tokenization could provide a quasi, a higher property right and a higher utility to a lot of financial assets that have value to people. Mm-hmm. Right now, I think where we're at is there's broad consensus that things should be tokenized. There is support from Atkins at the SEC and Contez at the CFTC, and from the Secretary of the Treasury, Scott Bessent, that, we should lead in digital assets, which means tokenization of all form of assets. We only have one law, the Genius Act, which kind of touches on the tokenization of dollars. Mm-hmm. But, it goes part way to establish a framework for the tokenization of dollars, but it doesn't fully empower them to be, utilized. I mean, there are a lot of constraints in the Genius Act. Like for example, you can't offer a yield on a tokenized dollar unless you're a bank, right? So there are some constraints, and there are some obligations, but there's also some legitimization in the Genius Act. The Clarity Act is really the next thing up on the docket, which will be the priority this fall, probably for the rest of the year. And there at some point, there'll be some understanding of whether you can or cannot tokenize, but the Clarity Act doesn't fully embrace the idea of digital securities yet. So it's not clear to me whether or not you'll have tokenized securities of stocks and bonds and real world assets codified into law, even after that act. And so there's going to be a gray area about what the law allows you to do. And because there's a bit of a gray zone, that actually creates some ambiguity about what's the right technical approach. Mm-hmm. For example, if the law said it's okay to tokenize this stuff and move it, peer-to-peer at the speed of light, there's nothing that stops Apple from tokenizing every stock on the Apple Pay network. But because the law doesn't make it clear whether Apple has liability if you transfer, securities between sanctioned individuals in India, right? It kind of is going to slow down Apple, which means that the decentralized networks or quasi-decentralized networks will have an advantage because they could tokenize and they don't need regulatory clarity. And so I think that we're moving toward a world of de facto recognition of digital securities and digital tokens from the SEC and the CFTC, and it'll come through the rules process, but we don't quite have it yet. And I don't know if we'll get in law legitimization or legitimacy for tokenized stocks, bonds, or other crypto tokens, not for a while. So I would say we're in this in-between period where there'll be leadership. Probably the leadership will come from the cabinet. The industry will adopt things. they'll become de facto, standards. And as the de facto standards build, you'll see a lot of capital flow in to these standards. And maybe they'll be codified in law before 2028. Maybe they won't. Maybe there'll be some, controversy over it. I can't say at this point. The only thing that's very clear to me, right, the greatest regulatory clarity is Bitcoin is a digital commodity, and you can hold it as a store of value, and you can issue digital credit against it. I think a certain lesser clarity is you can create a stable coin if you're a corporation and not pay interest on it. And you can create a stable coin if you're a bank and maybe you can pay, maybe you can tokenize your deposits. There's a little bit of clarity there. And I think the rest is it's a wild west, but it's a wild west in a liberal, progressive political environment where there's support from the White House and the SEC, Treasury, and the CFTC. And 2 years ago, it was a wild west, but in a regressive, cynical, skeptical environment without political support, where the White House, the SEC, the CFTC, and Treasury were against. And so that's where we stand today.
Bitcoin has a rough beginning to the month of October, despite the long-term promise it holds. As soon as the cryptocurrency reached a new all-time high above $126,000, it saw a precipitous decline, which resulted in a loss of $23,000 in just 10 days. The sell-off was spurred by escalating political tensions, including the increased tariff threats against China that were made by former President of the United States, Donald Trump, which sent shockwaves through markets around the world. A major liquidation in an over-leveraged futures market contributed to the acceleration of the slide, which resulted in Bitcoin briefly falling below $104,000 and even reaching $11,000 on some exchanges. Strong financial reporting from regional banks frightened investors, which resulted in more pressure being exerted as a result of increasing fears of a banking crisis in the United States. Additionally, institutional attitude became more cautious, as seen by the fact that Bitcoin exchange-traded funds ETFs experienced weekly withdrawals of more than $1.2 billion, while gold prices soared past $4,400 per ounce as investors sought safer havens.
And when you understand Bitcoin Treasury Company, the very compelling business model is I accumulate a bunch of Bitcoin capital through equity. Then I begin to issue credit instruments against it. And those could be bond-like instruments. They could be convertible bond instruments. They could be preferred instruments. They could be convertible preferred instruments. They could be variable floating preferreds. So there are all sorts of types of credit that can be issued against the underlying digital gold. When you issue that credit, you create leverage on the capital. And when you create leverage on the capital, the equity of the company issuing the credit becomes digital equity, and that equity can outperform the Bitcoin. So if I want to create a company that's going to perform 2x Bitcoin, I take the Bitcoin, I issue Bitcoin back credit against the Bitcoin. I issue digital credit backed by digital capital. I create digital equity, and the digital equity outperforms the underlying capital asset. Now, that's a profound idea. Who are those companies competing against? Not really each other. What they're competing against is the existing credit instruments in the capital market where they're going to issue credit, or the existing equity instruments in the capital market where they're issuing equity. They're all just using Bitcoin as that leverage or as that base, that monetary base, in order to create better equity and better credit. So that being the case, you're going to see an explosion of these companies, and if they understand what I just said, if they understand it, then it stands to reason. Let's take Brazil. I create a company, OBTC, or Orange Bitcoin in Brazil. They're creating the first pure digital equity in the Brazilian market. And their base is Bitcoin, an asset going up 55% a year in dollars. And they'll be competing against other equities in Brazil that aren't going up 55% a year in dollars, right? Think about a company with a 55% growth rate being launched in Brazil. Is the equity valuable? Sure it is. Who are they competing against? Every company in Brazil, right? And then when they issue credit instruments, they'll be competing against every credit instrument in Brazil. When you go to Japan, Metaplanet is issuing digital equity in Japan. Who are they competing against? Every Japanese company. Bitcoin's growing 55% a year. What's the growth rate of the average Japanese equity? 1/5 that, 1/20th that. Then when they start issuing credit, Meta Yield, they'll be issuing credit, against Japanese credit instruments. The Japanese risk-free rate or the corporate bond rate for yield in Japan is like 50 basis points. If you offer 500 basis points, you are 10 times better than the thing they're issuing. So there's place for monsters, for mega companies, right? Metaplanet, won't just be the most valuable hotel company in the world. They may be the most valuable company in all of Japan, right? They can create, and by the way, they're small compared to us, but the point is they're not competing against us. Right. They're competing against Japanese equity and Japanese credit in the JPY currency, and that's a distinct capital market. That's why it makes sense to launch a Bitcoin company in Sweden, in Norway, in the Netherlands, in France, in the UK, in Brazil, in Japan, in Canada, and the US. Now,
the rapid reversal of market sentiment. That occurred after President Trump announced that the proposed tariffs on China would not be implemented. Was a clear demonstration of the volatility of Bitcoin. The remark spurred an immediate rebound, which caused the price of Bitcoin to rise from less than $104,000 to nearly $116,000 in a matter of minutes. It was a move that highlighted how closely Bitcoin today tracks global risk sentiment, reacting swiftly to changes in geopolitical affairs. The confidence of investors has gradually increased as a result of news that the United States and China are planning to hold diplomatic discussions in the near future. The recovery of Bitcoin, for the time being, exemplifies both its vulnerability in the face of macroeconomic uncertainty and its rising significance as a real-time barometer of the mood of the global economy. Bitcoin is a digital asset that is sculpted by the headlines that move the world.